You are listening to ChartingWealth.com for Thursday, the 16th of July, 2015. As always, we start with IYY. Let's brighten that screen up a little bit. IYY, look at what has been happening. Again, this is a total market exchange-traded fund. What do we see going on? For those of you just listening by audio, back on the candle, and again, we always start with the two-day chart. The candle on the 9th of July was the bottoming of the market, at least here over the last several weeks, and we saw it come down somewhere in the neighborhood of, about 10, let's see, the low was 103.23. At that point, it appears that things started to turn around. The derivative oscillator started falling off, and the derivative oscillator, for those looking at the chart, is this light red rectangle bar that we see on the bottom of the screen where my arrow is pointing, and it has gotten smaller since the 9th. And again, that is just a type of indicator that we use to give us a little bit of feel for what's going on. What we really use are the blue and red lines at the bottom of our screen, which are our signal line and our moving average convergence divergence. And what we see happening there is we saw the total market roll over back between the 28th of June and the 1st of July and trudged down, but for a pop-up back around the 19th and the 23rd when the Federal Reserve came out and said that they weren't going to increase interest rates for a while. Then we saw the market pop, never crossed all the way over going up on the MACD, and then rolled over pretty hard down to the low again, like I just spoke about on the 9th of July. And then it appears that the market did start moving up since then over the last two-day candles. So for the last 4 days, what do we see? Well, we don't see the MACD having crossed yet. Now again, we've taken off our 2-day trend line that we had drawn connecting our red candles going down. And once that was crossed, that is always a good signal that if you're in a down move, that is, you were making money as the market was going down, perhaps in an inverse fund, that you want to consider getting out. And again, we talk about virtual trades all the time because we do not give trading advice. We are not a stock calling service. We are simply an education service. All we're doing is talking about things and trying to educate. But if you were in a virtual trade in an inverse fund, then you may very well have gotten out when that 2-day trend line was crossed. Now, when did you get in going up? Well, as far as our 2-day chart, you would not be in yet. And you might say, why? Why wouldn't we be, Tom? For the same reason you would not have gotten in when the market turned around and went up starting around the 19th of June, only to peak out and then roll over. The reason is we use our two-day chart and our 2-day MACD to give us our signals as to when we get into a trade. Well, we haven't crossed yet. So you might say, well, wait a minute, there's been significant up movement. Yeah, there has been over the last 4 days, just like there was over the 4 days around the 19th, which it would have been hard to capture when it rolled back over again. Now, if we do see over the next few days the MACD crossover going up, then what will we do? Well, we will do this. We will drop over to our 4-hour chart, and we will wait for the 4-hour chart to actually back up, roll down, as it were, and then pick up some steam again, crossover going up. And I'm just showing if that occurred. This has not occurred yet, but crossover going up, and then we would get in. The initial crossover that I'm looking at here between the 9th and the 10th of July is the first crossover going up on the 4-hour or half-day chart that depicts the movement we've seen over the last 4 days or so. And you can see those in the green up movement that we see on the chart for the half day. But again, the half day chart is a quarter the size of the 2-day chart. That is why it is not our controlling chart. We wait for good, strong movements to take place on our 2-day chart. Now, you can trade the 4-day chart. The only problem is it's much more apt to make small movements and adjustments, just like I'm circling between the 15th and the 17th of, that must be June, yes, of June, where it looked like it was moving down. About the time it crossed, it flipped right back over and went up. Would have been a bad trade there. What about the other ones? Well, you had some okay ones. You had some trades that could have been made back in May, another one in June. You would have gotten faked out there in mid-June, and another one in late June. And then, of course, this one in July that has started. So what we will wait for is for this current trend, if it is a real trend, to roll off and maybe move back up again. And then we would get in after the MACD on the 2-day chart had crossed over going up. The 4-hour chart rolled over and then crossed again so that we have parallel up movements in both. That's the safest way to do it. And it's your virtual money that you would be spending right now to decide what to do on that. We do see that as the day ended, we see the first red candle in quite a while on the 4-hour half-day chart, a rolling down of the up movement in the derivative oscillator, and it looks like we see a little kink there in the MACD itself, causing it to come a little closer to the signal line, which can mean that some of that steam is blowing off. We'll just have to continue to follow that. But that's where we are right now. And of course, we can use this as an analogy for what we see in the other charts. We go to the SPY, Standard & Poor's 500. We see very much akin to what we saw with the IYY. We see an up movement over the last 4 candles, getting close to crossing over. And if we revert back to our half-day, 4-hour chart, we see the same kind of what appears to could be a topping out on the movement, at least on the 4-hour chart. So we'll keep an eye on that. Now, if we go back to our 2-day chart and we go to the Qs, which is the QQQ, cubes, some people call it. It is the NASDAQ 100. It also has had some significant up movement over the last 2 day candles, so that's 4 days. And it's getting very close to crossing over, going up. Hasn't done it yet. We will see what happens over the next couple of days. And of course, if we look at the 4-hour chart, it also seems like something was pulling the market down at the end of the day. This again, what we're looking at is what happened on the 15th, Wednesday. Up movement during the morning, and then a down movement during the afternoon. The Qs was actually up overall 0.11%. For the record, SPY was down for the day 0.03%, and the total market was down 0.21%. Again, these are points of percentages. These are not, this is not 11%. This is literally 0.11% on the Qs being up, so not a great up move. Lastly, let's range back out again to our 2-day chart, and let's look at gold. I love gold. What is gold doing? Well, you can see that we have a very good 2-day trend line starting around the 23rd on the 2-day chart, and it has continued to hold up. Gold has continued to move down below that. We had the 2-day trend crossover going down back on between the 19th and the 23rd, and it's continued to track down very well, very easy to follow. Derivative oscillator continued to heat up today, and it appears that the MACD is ranging out even further. So there's been significant down movement in gold. Gold, for the record, today was down 0.52%, but again, we're not looking at a daily candle. We look at the 2-day candle. Now let's take a look at what really happened during the day. When we look at what occurred with gold, we can see gold had significant down move on the 4-hour chart this morning. It actually crossed back over. It had been technically in an up movement on because the MACD crossed over going up only on the 4-hour chart, but it crossed over going down this morning. Significant down movement in the morning, a little bit of up movement in the afternoon. Overall, gold down about 0.5%, 0.52%. That is where the markets ended. So what are we doing? Well, we continue to see gold move down. If you're in an inverse fund on gold in a virtual trade, that is great. That is what gold has been doing. The Qs, the SPY, and the IYY, the total market, those are in up moves on the 4-hour chart, trying to cross over on the 2-day chart, but we don't have a confirmed crossover yet. So we would not technically be in that move because we're trading off the 2-day chart because it's a bigger chart, it's a bigger wave, and it's safer. Hope that this has been helpful. We appreciate you joining us every day. If you don't receive our newsletter, go to chartingwealth.com and sign up for it. You'll get this plus our training when those come out. Plus, you will get our weekly review and forecast. So thanks so much for joining us. Follow us on Facebook and Twitter. We love your comments. Thank you so much. From chartingwealth.com.